Excellent. Shall we get started, Phil? Excellent. So my name is Michael Phillips. I'm a cyber insurance lawyer, so hold your booze to the end of our panel conversation today. I'm with the emerging cyber insurance firm Resilience, and I was grateful to participate and co-chair the task force's efforts. One of the lines of effort that we really focused on was cryptocurrency and the role that it plays in the ransomware epidemic today. And so, I'm so pleased to convene this wonderful panel of experts to discuss it. Where are we today? Where do we see opportunities for the future? What are some obstacles to investigations, to enforcement, and to disruption, to lowering the profits and making the ransomware criminals' expertise more less quality. I'm going to take my dear co-chairs' good modeling and allow my panelists to introduce themselves, and we'll also reserve some time at the end for questions as well. So, Carol, can I ask you to introduce yourself?
Yeah, thanks. Hey, I'm Carol House. I'm the National Security Council Director for Cybersecurity and Secure Digital Innovation. I come to the NSC from the Financial Crimes Enforcement Network, the Bureau at Treasury that regulates all the anti-money laundering, countering terrorist financing requirements, and is the primary regulator for cryptocurrency. So at the NSC, I'm also supporting cryptocurrency, ransomware, and identity work.
Thank you. Caitlin?
Hey, everyone. Is this working? Yeah. Okay. Closer? Okay, cool. Here we go. Hey, I'm Caitlin. I'm BlockFi's VP of Security and Digital Asset Custody. I've been working in crypto since about 2016, 2017. Prior to BlockFi, I started KPMG's blockchain and crypto asset team. I've worked at Bakkt, and then had a mostly private sector working in big tech focused on cybersecurity.
Hi, everyone. I'm Catherine Johnson. Happy to be here from the startup world. I joined the board of IST earlier this year. I work for a company called Storage. We do decentralized cloud object storage. There, in typical startup fashion, I wear multiple hats. I'm the head of people ops and legal and compliance. Prior to this, I worked for Coinbase starting in 2017, where I was director of compliance management, building up their compliance team, and then starting in 2018, director of compliance regulation, where I represented the company in regulatory exams. Prior to that, I had a fairly long career in New York as a lawyer, kind of straddling the worlds of legal and compliance, starting out at Fried Frank. Happy to be here.
Afternoon. My name is Gervis Grigg. I'm the Global Public Sector CTO for Chainalysis, the leading blockchain analytic firm. Prior to joining Chainalysis a little over a year ago, I retired after 23 plus years as an FBI agent and executive, having worked a vast different variety of cases, including counterterrorism, white collar, and the like. In my role as a public sector CTO, my job is to ensure we're building the best data and tools for our public sector customers globally.
Well, thank you all for joining. And one thing that we heard throughout the remarks to date here is the role that cryptocurrency plays as the unfortunate lifeblood of the ransomware epidemic. The IST's report focused on a few areas of intervention to enhance information sharing, to centralize cryptocurrency expertise in government, and to look for opportunities for focused regulatory attention. But one thing that I think we were keen to highlight is that blockchain technology and the firms that drive it have tremendous promise and tremendous real world applications. And so I thought I'd kick off the conversation by asking Catherine to talk about sort of the state of play from the cryptocurrency industry's point of view. How have they been responding to the ransomware epidemic?
Well, I think that it's true, the old adage that even in with advanced technology, we can rely on kind of the old-fashioned techniques to help us, and definitely that's the case when it comes to ransomware. I mean, it's not that different. What you can put in place and what you need to put in place to be secure and make sure your company is secure. What I've seen kind of in the different corporate cultures I've been in, including spanning from East Coast to West Coast to now the Midwest, from, Bank of New York Mellon to, multiple different banks at EY to then crypto Coinbase and then now to storage, is that the same tools apply. You need to have good corporate hygiene. You have to have, a risk-based compliance program. You have to have, stringent, rigorous hiring practices to make sure that you're bringing in people who are familiar with what the risks are and know how to handle them. At Storage, we have a blind homework assignment that people perform. And then as soon as you get them in the door, and this is kind of my head of people ops hat now on, you think about the life cycle of your employees. You've got to have, that training to make sure that people are aware of what the risks are currently. And then also, make sure that your security team is working with outside auditors, doing the risk assessments, that you have a very, very healthy policy management framework so that your policies are being updated regularly and you're able to incorporate the things that we're learning. All of this doesn't come naturally to startups. And so I would identify that as, as a risk that we have with companies that are working with new technologies. That's why I'm also a firm believer in cross-pollination, government to industry, and, more traditional industry to newer technologies.
Caitlin, may I ask if as ransomware has become a national security concern, has the approach that you've seen in the industry, has it changed to meet that higher threat level?
Yeah, I mean, I think we take a defense in depth approach, and it's very much something that we're aware of. But I think including your monitoring programs and your incident response programs, and working with your in-house lawyers and external counsel, your compliance programs, so that if something does happen, you have the right response and you can respond appropriately. But also, I mean, the core of this, typically, crypto is not necessarily the main problem here. It's very much like an off-ramp to be able to do this. I think that if it wasn't crypto, it would be something else. And your security programs are kind of your front lines in preventing against a lot of this. And as Catherine mentioned, startup life is hard. It's not easy to do. You think you have a product and you think you have clients, and it can go from 1,000 people to 100,000 almost overnight, and then your whole scope and everything that you have to do changes, and it can change very quickly. So I would say our security programs really try to cover all of these things. The technology is still new. Finding people who understand crypto, who understand blockchain technology, and who are good at cybersecurity is not easy. It's very difficult. So that's another challenge in startup world. And then, trying to understand and adapt with everything is really difficult too. Things change overnight. There could be a new form of a smart contract vulnerability that no one's ever heard of. And then you're like, okay, what do we do now? So it takes a lot of people. It takes a lot of collective effort. It takes a lot of smart people trying to solve really hard problems all at once while you're trying to build a business.
Purvis, you've seen from both sides. How are you finding the private sector responding to the ransomware epidemic if they've got cryptocurrency or blockchain built into their business?
Yeah. So having worked on both sides of the badge, so to speak, right? It really comes back to what we heard earlier today about partnerships. No single agency, no single organization can address this problem. It requires a coordinated whole of government's approach, which includes bringing in both private sector partners, researchers, et cetera. I was really excited to hear what Lisa Monaco shared with us earlier today. And when you really think about the way to disrupt ransomware, the key to that is disrupting the ransomware supply chain. And that means you've got to go after the affiliates, the administrators, the cash out, the money launderers, the mixers that are illicitly allowing to obfuscate those trails. And so you can't solve any problem without first understanding it. And how do we understand it? We've got to have the right data, tools, and then that crypto literacy throughout the government and those private sector partners who are working this problem.
Carol, I wonder what you think. How good of a visibility do we have into the ecosystem when it comes to cryptocurrency and ransomware?
So there's definitely a lot of benefits that you get with cryptocurrency, and I'll take a little bit of a different view on the role that cryptocurrency plays. So there are a lot of really interesting features that come with distributed ledger technologies and cryptocurrencies. They can allow for privacy preservation, for nearly instantaneous settlement of significant value transfer across borders. that also means that that basically enables a wire transfer from my pocket to yours anywhere in the world. And you could be in Iran and I could be in North Korea, and there's nothing potentially stopping it. I'll put an asterisk after that because there's some really interesting stakeholders that might have some visibility and responsibilities to play in the cryptocurrency ecosystem. But based on all of that, it really depends on the design and the implementation. Most of these ledgers are public, which offers a really great opportunity for analytics and attribution that can support investigations, but also without there being an identity tied to those addresses and that attribution on the other side, being able to see the public address or public key associated with that transfer isn't necessarily terribly helpful. Again, when you have a system that allows for this nearly instantaneous cross-border transfer of significant value. So with cryptocurrency, there's a huge vulnerability with the absence of sufficient international regulation for virtual asset activities consistent with the Financial Action Task Force standards for anti-money laundering for crypto. So those need to be applied. That issue really hinders our visibility. I'll also flag, though, that for U.S. regulated exchanges who've been regulated since 2011, there's often a myth about this being an unregulated space, highly regulated. Compliance, different story. But also compliance has really been improving over the many years. There's been a huge focus on trying to figure out how to build in innovative technologies and solutions, and also fulfilling obligations like reporting suspicious activity reporting to the Financial Crimes Enforcement Network, FinCEN, my home agency. So we get incredible reporting from many of these virtual currency exchanges that help us identify and map out these ransomware networks as well as other criminal activities associated with crypto. So there's goodness that we get. They leverage innovative technologies to be able to monitor for suspicious activity, but there's also key challenges where oftentimes they don't know who's on the other side of a transfer because things like identity and sanction screening were not built into these ecosystems.
So if I may stay with you for a minute, are you finding increased government collaboration as well? So, your prior role in Treasury, focused on the financial element, but there seems to me the law enforcement piece, the technical infrastructure as well, and that expertise needs to come across. How are you finding that?
Absolutely. The administration sees that ransomware it's a cyber problem, it's a financial problem. There's vulnerabilities that are being exploited on the cybersecurity side, vulnerabilities on the financial side to allow the laundering. However, those also allow for two vectors of disruption. On the cyber side, to go after the criminals, the infrastructure, the actors behind this, as well as to go after the financial facilitators and to leverage financial consequences on those who are responsible for this activity. So the administration started last spring, launched the U.S. counter-ransomware strategy, and we've been leading 4 really key lines of effort on disrupting these key actors, infrastructure, combating the misuse of cryptocurrency, bolstering international partnerships, and a surge on resilience. So with all of those, we've seen huge partnerships with industry. FinCEN has hosted the FinCEN Exchange, public-private partnership that they have to share typologies with law enforcement and industry to help them identify this activity. We also launched the Illicit Virtual Asset Notification Partnership that's chaired by the National Cyber Investigative Joint Task Force, another public-private partnership to try to make sure that we can rapidly trace and interdict these illicit financial flows. So a huge amount of collaboration, I think, across government, certainly to focus our disruption actions. We have state bringing authorities. They've offered rewards for Conti, DarkSide, Our Evil. $10 million for anybody who can give information to lead to their prosecution. We've seen law enforcement actions, tons of sanctions against darknet marketplaces and exchanges that facilitate these proceeds. So a huge amount of collaboration.
Well, thanks, Carol. I thought I'd ask Catherine to talk a little bit about some of the challenges in the space, especially with respect to the regulatory environment. Clarity around how your technology may or may not be subject to these kinds of
Sure. Well, I'm happier to be answering this question now than a year ago. And kudos to the Biden administration for the executive order that came out earlier this year. I really love it. I agree with those who say it was a watershed moment, including that, aside from calling for a whole of government approach to addressing, the need for regulatory clarity over digital assets, it also identified issues that have already come up including impact on the environment, access, economic, financial access. And so, not a lot of time needs to be spent figuring out, oh, those are issues here. It's an acknowledgement that they are and a call to identify what we can do about that. So I'm very grateful for that. I think that if somebody's not already in the startup world or, working with companies that are building apps and projects, in a decentralized fashion, one of the things that they might not be aware is the ability of these Web3 technologies to address what went wrong with Web2, including data privacy issues, including the buying and selling of our data, including inequities that resulted, issues with, who was building the software and then who was it servicing, who was it helping, who was it harming. And so we have a real opportunity here to do that, but to address those issues. And a lot of the projects that I'm seeing, especially, in my home city right now of Minneapolis and the Twin Cities, a lot of young founders, new founders are developing apps that can help address some of those issues, but they're building them and they're growing them in an area where they don't know for sure how it's going to be regulated. And so, they're going out on a limb by doing this, but taking a risk as a founder when you don't know how and whether something's going to be regulated is really challenging. So I'm very eager to see what comes out of this executive order. And, I think it's important for others to note too, that when we're talking about blockchain, we're not just talking about cryptocurrency. One example is the storage network itself. So the network itself is not on the blockchain. The blockchain, the Thanksgiving, you're home with your family version of it is essentially, it's a network of, Airbnb for disk drives. However, we're able to make payments to storage node operators all over the world who are providing that otherwise unused disk drive space with a digital token, the storage token. And so I think it's important to not just think about, digital assets and cryptocurrency itself, but how we can use blockchain technology to address some of the greater issues that, have come about largely from Web 2.
Thank you, Catherine. I think it's a good segue to ask Gervis to talk a little bit more about blockchain analysis and what we can do to accelerate the investigative tools that can help disrupt ransomware actors and maybe where there might be gaps in our knowledge.
Sure. So while it's unfortunate that cryptocurrency is taken to become the primary payment rail for ransomware, it's also presents opportunities for law enforcement and investigators to follow that money in a way not possible with virtually any other asset class, because they are leaving immutable, indelible records on the blockchain that are permanent. That provides an opportunity to follow that. We saw recently with the seizure of the Bitfinex hack money taken all the way back in 2016 to the tune of over $3.6 billion. Right? So even if law enforcement investigators don't know who the perpetrator is today, those records remain and are persistent. And when that attribution is achieved, they have an opportunity. I think it's important to also understand, and it was mentioned this morning, about the inherent underreporting that we have in this system. And so we're really pleased to see that recommendation coming out of the task force and reflected in the executive order. What was it, 3 weeks ago today, we recomputed to look at how much ransomware we could identify having been paid in 2021, and it was to the tune of over 763 million. In 2020, it was 723, I believe, or 28, which shows, in spite of the outstanding efforts that have had and the increased focus on ransomware, we see no signs that it's slowing down. And really, there's a data echo even in that data. We know that the number is even larger. And so when I sit here next year, we'll find that the number that we thought was big this year was actually even bigger. But the bottom line is we're moving in a positive direction because we're beginning to marshal resources across the government and across industry to go after this threat. And I was pleased to hear what Catherine said as well. Right now, we think this is big and is a challenge because we're dealing with digital assets that are taking the form of cryptocurrencies and NFTs. What about 5 years from now when potentially my mortgage and other types of items that we value are being stored and brokered on the blockchain? I spent nearly a whole day the other day at the DMV in Texas to prove who I was so that they then could issue me a new form of ID in that state. By the way, I love living in Texas now and coming back home. But why should I have to do that? Why couldn't they have done an authorized handshake that I said, for this limited purpose, you may access my data that I own and have rights to and validate who I am with my state that I just moved from and issue me this ID. You know, my friend went to the game the other night to see the Mets, and he's in his mid-50s and they carded him anyway. He kind of took a little bit of offense by that, but that's their policy. And he had to show all of his information on his card when all he really needed to reveal is whether his age was greater than 21, right? So I think we're going to see a new form of identity management and efficiency, and that's going to bring back savings and protect people in ways not previously possible. But it's also going to present enterprising opportunities for criminals to look after new ways to steal, because they are following the money and they're going into crypto and digital assets for the very same reason that the vast majority of legitimate users are. Low cost, high speed, trans-border. And we've got to address that.
So you've raised what I think is probably the hardest question, and I'm going to ask it to Caitlin and Carol both, which is, you know, so many of these technologies, at least as I understand them, have privacy by design, or they're designed to be, you know, to obfuscate the user. And yet information sharing, we've heard, is such a vital part of our fight against ransomware. How do you make those kinds of decisions? How do you see folks making those kinds of decisions? How should we be thinking about that in the abstract?
Yeah, I mean, it's a hard trade-off, right? Because most crypto users who are crypto native want that privacy, and they don't want to be known. They don't want to give all of this information just to send money, or they don't want you to know who you're sending money to, whether that's for nefarious reasons or not. You know, depends on who you are. But I think for us as I think Carol mentioned this too, like as a regulated entity, you know, we have to know who our clients are. And at the same time too, like we don't want anything bad to happen to them. We want to protect their funds. Like a ransomware attack on a company like a BlockFi or Coinbase is bad for us, it's bad for our clients, and it's horrible for the industry. So like we want to take as much precaution and measures as we can to prevent those things from happening. And I think that, you know, the trade-offs that you have to make between that, you know, we have our regulatory obligations and our compliance obligations, and that's going to come first and foremost. Otherwise, we can't offer these products. So I think that's kind of more our stance. The privacy portion of it is important. And I think, you know, you don't need all of that information necessarily to be like sending money. You know, I think my opinions probably aren't super popular here, but yeah, I think we'll do what we have to do to continue to offer products, but at the same time, it is a balance. Yeah.
I'm really glad that you brought up the privacy enhancements in this space, because it really highlights one of the key issues that I take with sometimes part of the narrative is everything is public, so you can see everything. So this is all good, and it's like it's less risky than cash, which again takes like time and space and physics to move from one location to another. When you know crypto transfer can essentially be instantaneous, but there's also nothing that makes it inevitable that these ledgers remain on public, unobscured ledgers. We're seeing a lot of innovations. We've already seen developments for many years, anonymity enhanced cryptocurrencies that have operated, building layer 2 solutions, use of mixing and tumbling services, lots of things that build in these obfuscating techniques and potentially for illicit purposes, right? Like privacy is really important. I understand. I also do not publish my transactions on a public ledger for the world to see. But there's a really interesting balance that I think that's going to have to be built. And there are a lot of focuses right now that are happening in the space, trying to build innovative technologies, leveraging homomorphic encryption and zero knowledge proofs to figure out how to make sure that there is privacy, which means like the data is still there. It's discoverable, lawfully discoverable by appropriate stakeholders like regulated institutions that need to comply with their risk-based obligations for AML, and also for law enforcement to be able to identify and detect this activity. But ultimately, like that is still in a very much nascent stage. So I think that there's a lot of potential concern about the privacy enhancements. And there's a lot of institutions right now that are offering services and offering certain assets that have these privacy enhancements and maybe not necessarily have built in the right kind of risk mitigating features based on the services that they're offering.
So Gervis, one thing that Carol's comments highlighted is how elaborate the money laundering ecosystem is for the ransomware actors. She mentioned mixing services, tumblers. How are we going to disrupt that kind of activity?
Yeah, the money laundering network is a really fascinating aspect of this, and it triggered a thought that one of the things that we found when we were looking at ransomware payments in 2020, for example, we found that 80% of all ransomware funds ultimately landed at just 5 services globally and resolved back to just 200 addresses. Right. And then when you look at that further and break it down, you found that about half or 50% or more resolved back to just 25 addresses. Now, that's fascinating when you think about here you have this huge macro ecosystem of ransomware actors. And yet when you ultimately follow the money back, you're seeing this unique concentration of money launderers and facilitators who are helping them with their cash out services. That bespeaks a network. It also means that presents opportunity for investigators because if you can find those key nodes, you can have a dismantlement impact on a large portion of the ecosystem, right? It also reveals, and this is something our law enforcement customers that I talk to globally are finding, is the same network that these actors are using to launder their ransomware, those same facilitators are also laundering funds for lots of other kinds of criminal activity. So what we'll say is, your bad guy doesn't have to use a lot of crypto. Let's say you're going after a narcotics smuggling organization. Even if they just use a small percentage, you can use that to map their criminal network and find how they're laundering their money across a broad spectrum of other activities. So cryptocurrency can help you map their organization and find it. That's where this strategic targeting and partnership can help between what industry knows about the ecosystem and what government has the authority and power to do, because they are really combined can make powerful impact and dismantle.
Maybe just a couple more questions, and we'll open it up to the audience to join us in this conversation. I'm curious a little bit more about the information sharing from a voluntary perspective, Carol. What obstacles do you hear presented to you when you meet with the private sector and you're looking for some voluntary information sharing?
Interesting that you bring that up, because I was at a forum the other day where some cryptocurrency stakeholders were saying that there is no ISAC for the cryptocurrency sector, which I thought was interesting, because I thought there's a financial services ISAC, like you could join that, but also you could create your own. Like, what a great idea. I agree. We've highlighted that these cryptocurrency companies, some of them are being targeted by illicit actors. We saw $500 million targeted and stolen by North Korean actors recently. Think about this opportunity for the cryptocurrency ecosystem to share information with each other. The government has provided liability protections in this space in a way that I think can be very mutually reinforcing. On the cyber side, you have the Cyber Info Sharing Act civil liability protection, and on the anti-money laundering side, they have the 314B civil liability protection. So when it's cyber-enabled financial crime, 2 layers of potential civil liability that might help enable that information sharing. So I think some of it's just awareness that I've noticed that the sector just isn't aware of some of those things. I think we have to continue to prompt them and stoke that, and then we also have to continue to offer information from our side, to share, red flags and typologies, indicators of compromise that we identify, that we publish in an alert after that hack of the exchange. So the government will continue to try to proactively do that, and will continue to message the need for proactive information sharing about some of these payments.
So on the other side of that, Caitlin, I'm curious if you could speak to how cryptocurrency businesses or blockchain businesses share information in an association, or are there emerging best practices that you're seeing in this area?
Yeah, I think it's a good question. I think information sharing is definitely hard, even with other private sector companies. We're all competitors in a way. So sharing, the information that we have, some of it you don't really want to do. And I think it's hard to kind of create some of these working groups to share information and establish that. I think we all have friends at different companies that it's like, hey, we saw this, and you can call each other and things like that, but nothing that's super formalized. And I think we would love more collaboration on the other side as well, to be able to share information, because that only helps us. I think with all of the threats that come in, it's really challenging to sometimes protect against all of these. And, we want to protect our clients, we want to protect our employees. And it's difficult to do so when you might not know what's happening. I remember even when I first got to BlockFi, like we came in after a security breach, and like it's almost that feeling when you're like, oh, I have no logs, something's happening, but I don't know what, and I need to go and figure this out, but I don't have a way to see it. So I think information sharing can kind of, take that form. I will say some of the working groups that we've had, along with FinCEN in particular, and like travel rule and things like that, my opinion, I think they've gone, really well. I think when you have collaboration and you have, regulatory needs that you need to address, and you try to address them as a group and you solve these hard problems together, the solution that you get is significantly better than if it's like, hey, here's what we want you to do. We don't know how we want you guys to do this, but like, just go and figure it out. That's hard for a number of startup companies to try to figure out, because now you might not have the right people. You're trying to deploy talent and resources to that. You're also trying to make money. So I think the more collaboration we can get that would have better solutions, and then also lead to more information sharing that can be helpful to better protect against like different threats and ransomware, a ton of different things. It's just going to help like kind of booster the overall security posture of the entire industry.
Well, thank you, Caitlin. Well, why don't we open it up for some conversation with the audience? If there are any questions, I could certainly drive the conversation, but happy to. Oh, there's one in the front. That's right.
Hello, Harry Schwartz here. I wanted to respond to Caitlin's, or ask others in the group. I asked Caitlin to respond on the question of the point that she made, that if people didn't use ransomware, bad guys didn't use encryption, they would find something else to use. What is that something else? What should we be concerned about when they stop using crypto? So, and I wonder if other people agree with that statement on the panel, that crypto isn't really one of the main things that drives ransomware.
I mean, I think I view it more as like an off-ramp, right? I think crypto was not created to be nefarious. It was created to have a new like system of money and have peer-to-peer transactions as a result of the 2008 financial collapse. Like that, crypto was not created for a nefarious purpose. I think a lot of people forget that. They look at it and it gets a bad rap because you can do these things, right? Like that's kind of what comes with creating new money that is not centralized and not owned by a central authority. Like you're going to have the ability to maybe take advantage of it. I think you would have that with any new technology. I think you have that with any new money, anything that's new coming up. Somebody is always going to try to take advantage of it. I don't know what the next thing is going to be, but I would, imagine, and I'm not a quantum scientist, but I would imagine when quantum computing comes out, it's going to have tons of great benefits that we can use, and people are also going to try to take advantage of that. And I'm fully aware that, like, yes, you can use crypto for nefarious activities, but, banks laundered money for years. Like, these things are not new. There's just new technology enabling new ways to do it. And I don't necessarily think new technology is the problem. I think, like, you're going to build new products and services around, what is becoming available. And then, you need a lot of people like that are all in this room, and you need a lot of smart people to build said products, and then also make sure that it can be secured and you can protect whoever it is, whether it's yourself, it's your clients, it's your investors, it's people like you. I think that's just the evolution of tech. I think it's the evolution of money. And then all of these things are just going to continue to grow.
Carol, did you want to chime in as well?
Yeah, I really appreciate your views. I know that in my personal perspective, if ransomware, actions were all asking for gift cards, wire transfers, and ACH, I don't think that it would be at the scale that it is today. But I also don't think that that is an inherently evil feature of cryptocurrency. It's not about the technology. Like any payment system or technology, it can be exploited, especially when proper controls are not built into something like a value transfer system that allows for transfer anywhere in the world. So basically, it's really that key vulnerability of like the absence of sufficient regulation and oversight internationally. I have an active enough imagination to see that if we actually had international implementation of the FATF standards, if there actually was identity that was tied somewhere, whether it's at the on and off ramps or actually built into the ecosystem, since I also think it's an assumption that we will need on and off ramps if the future of the ecosystem is that we continue to have lots of merchants offer goods and services for crypto. You may not need that conversion as much. I'm not sure what the future of money is. Treasury is going to tell us in about 4 months. But all of these things that I just recognize that you have to build in those controls and those features. And if you don't have them, then yes, that's why crypto is a favored tool for money laundering by cyber criminals to purchase their exploit kits and launder everything on the back end. It is a favored tool, but if we sufficiently regulate it, I think it's possible that it becomes a very difficult tool to use for criminals.
Well, Carol's comments and the question also really highlights the international component, which we should spend a few minutes on. Even if we are all well-meaning cryptocurrency businesses and blockchain businesses here in the United States and well-regulated, the technology does permit the money to be transferred to international jurisdictions where life is hard. How do you see that opportunities to change that?
Yeah, I mean, we've been working internationally. The White House actually hosted the Counter Ransomware Initiative with over 30 countries and the EU in October. So we continue to work on the illicit finance work stream there to build capacity, make sure that there's diplomatic efforts as well as capacity building and training to build their ability to investigate, effectively regulate, oversee, and enhance compliance of cryptocurrency in the space. And of course, Treasury continues their efforts in the Financial Action Task Force. State also does a lot of capacity building efforts as well. So we'll continue that front.
Catherine, yeah, please.
Going back to what I was saying about the importance of who's at the table, who's building these technologies. So we're a company of 77 people across 5 continents and in more than 17 countries. And the languages that brings are not just English, Spanish, etc., but it brings the languages of different cultures, of different risks, different understandings, geopolitical understandings, and so I'm hoping that we see more more of that kind of thing happening in industry. That we find ways to bring in people who haven't been at the table, and that we bring in the value that they bring in the tools that we're building.
Just one final comment on that. I think one of the interesting aspects that the use of cryptocurrency brings that was mentioned earlier is that transparency and immutability and permanence of that record that law enforcement and investigators have not had to that degree. And so I think that offers some unique aspects. I was on a panel the other day with a private sector attorney who helps with recovery of stolen assets and the like. And she indicated, she said, a client may come in and said, I've been a victim of a $10,000 scam. Well, depending on what the threshold of the particular law firm or even the law enforcement agency, that may or may not land with the expectation of what the victim was hoping to get. However, they said we use tools where we can quickly go and ascertain whether that victim is a single victim or part of a larger scope. And she mentioned how they use our data and tool, for example, to go in, but blockchain analytics help them to go and see, wait a minute, there are 27 other victims who've had the same thing happen to them to the tune of $10,000 or more dollars each. So now that's a very different kind of case. So it's that unification and transparency and speed at which those decisions can be made, that I think offers some really unique chances. And you're right. I mean, technology is going to keep moving forward. How are we going to address it? How are we going to mitigate?
If I could real quick, I love your point with that, and especially making sure that we remember that the technology can help address it. Decentralized data storage provides a way to have ransomware resistant tools. So, if we're able to ensure that innovation can continue, then we might not even be having this discussion. We might not need to worry about it. And with open source software, we're also able to look at how are the technologies built to understand them better. So the answers may be in the technology itself.
That's an optimistic note. And yes, sir. Oh, I'm sorry, Kemba. Yeah. Do we have time? I haven't been tracking time very well, Zoe. All right. Thank you.
Carol, Carol, you mentioned Section 314B authorities, which I think are underutilized, but I'd like to know from your perspective whether we're seeing an uptick in the use of it, particularly with crypto exchanges, and are there similar authorities for those in other countries for exchanges that don't necessarily touch the United States that we can leverage?
It's a great question. So again, for those 314B, it's like the Cyber Info Sharing Act liability protection on the anti-money laundering side. Since I'm not still at FinCEN, I'm not directly overseeing that. But when I was there, we were seeing an increased interest from the cryptocurrency sector in wanting to use and leverage 314B and figure out whether there were opportunities for associations as well that could help to facilitate that info sharing. So I certainly hope that was a signal that over the past year it's increased. On the international side, I'm not certain if it is. I know that we've shared that liability protection as a best practice with some of our international partners to try to highlight how we've tried to stoke some of that info sharing. But I'm afraid I just don't know the answer.
Sir?
Kind of in defense of crypto. I would challenge Carol's comment a little while ago that we'd like to go back to when people were using Cash App and gift cards and things like that. Because yes, the overall amounts of losses may have been significantly lower, but the impact on the individuals arguably can be said were significantly higher than even the millions that some of the businesses are being forced to pay right now. And kind of to what the Gervais was saying, that yes, the amounts may have been smaller individually, but overall, I mean, if you look at something like business email compromise, for example, I mean, until recently, business email compromise really did not use crypto very much. However, it still was able to, without the use of crypto, was able to, collect millions of dollars, and the impact on the individuals that were affected, that again, were probably even more significant than the impact of some of these huge ransoms that companies are forced to pay. So I think we kind of have to look at that as well.
Would you like to reply?
Yeah, no, I actually totally agree with you. And I actually always think about the BEC point there, because gift cards and wire transfers and ACH are often the predominant laundering method associated with BEC. The cryptocurrency is growing in instances of BEC. The FBI actually published a public service announcement about that, I think in January. That's why I flagged that. I know that it's just my personal opinion that like ransomware would be less, and that I think that because of the inherent features of instantaneous cross-border value from like unhosted wallets, like I think that those risk features, because of the absence of things like identity and effective regulation internationally, that's why it offers an attractive tool. I also think that if it is effectively internationally regulated, I think it becomes a very potentially unattractive tool, because then all those transactions are on a public ledger. So again, it's not me fighting against crypto. It's me saying that there just has to be sufficient regulation in the space. So I'm very sympathetic to that point. Thank you.
So I think we might have time for just one more question, and I saw the gentleman in the front.
Cryptocurrency was the lifeblood of this industry. Given that the value is on the downswing, has that had any impact that you've seen at all? That could be open to any members of the panel.
I don't know if the price is necessarily the key attractor to maybe using crypto as your off-ramp for extortion. I think it's just a way to be able to do it without being traced and using like an anonymous identity and not being able to be found. To me, I've always thought like the price doesn't necessarily matter. I think, that's great that it's, Bitcoin is what it is and has gone up to highs of 60 something thousand and, things like that. But I don't think that necessarily is the driver for using it as an extortion method. But I don't know if others have thoughts on that.
I don't know if you have a view.
Yeah, I think we're beginning to see this parity equate between crypto and tech stocks. For example, go out there and look at the performance of tech stocks and then overlay crypto performance, and you will see a tighter and tighter correlation. So I don't necessarily think that that the value of it is that principal driver. I think it gets back to these criminals are looking, like I said, they've turned to crypto for the very same reason that legitimate users: speed, low cost way to store and transfer value, trans-border. And so they're going to use it, and they're following the money. And you can't have trillions of dollars move into a new asset class and not attract criminals and grifters, right? It's just simply they're enterprising, and unfortunately, they're oftentimes ahead of the curve in technology adoption. but I can tell you from talking with partners around the world, law enforcement and government agencies are quickly making that ground up. These kinds of efforts like the task force, the executive order, and the things are facilitating that catch-up speed. But we still have a ways to go.
Well, I think, yeah. Please, Kaylee.
Kind of build off that point, like, and I don't know if it's like relevant to everybody in the room, but like we are getting significantly better. There was a point in time where a user could be a Coinbase user and a BlockFi user and a Gemini user, and you had no idea who those wallets belonged to. And I think with like the analytics tools like Chainalysis and others, like now I know that that could potentially be like another regulated entity. And if it looks nefarious, we have relationships with them that we can rely on and, you know, make a call and be like, hey, like we are seeing this. What are you guys seeing? So I think maybe some of the progress gets lost too. Like there was a point in time we had no idea where any wallets belong to, but I think as we get more regulatory clarity and start to work together more, now we can start to see some of these things. And it's like, oh, it's a Coinbase address. Maybe they know who this person is, and like look into other things. So I think like progress is definitely being made. Like not everything that most companies in the US do is fully anonymous. There's a time that it was. But I think it's definitely like trending and moving in the right direction. But with any technology, regulatory is always going to be behind. Like when you look at big tech, we're probably still behind on the regulatory front. And I've done tons of work for big tech companies, and like we probably haven't even scratched the surface there. I would argue that crypto is probably making more progress than that side. Again, a personal opinion, but I think like, again, with the attractiveness of the amount of money being like put into this, I think kind of makes it more of a priority. But anyway, all that to say, I think progress is absolutely happening.
Well, on that note of progress, I want to thank my panelists for sharing their expertise with us. And I'd like to hand it over to Phil. Thank you very much.
So thank you very much to our panelists. Thank you to Michael for moderating the discussion. We would like to give you a 10-minute break.